can be revised higher. The actuals will be higher unless you assume a real fall in taxes in the fourth quarter, which is no one's base assumption. So if the revision is higher, then actually they're assuming even lower tax revenues, which explains perhaps this buoyancy in the bond market. They
should be there, but I think apart from this, immediate reaction, I think on an ongoing basis also, it should actually moderate a little more, and which will actually push the interest rate regime also towards the lower side. So I think this is a welcome development, particularly for a developing economy like us. This means quite a lot.
Yeah, I'm going to come back to all of you and to the former CEA on the macro numbers. Just hold on for a minute, gentlemen. We have to address the stock markets as well. And Prashant Khemka has joined us. Prashant, what do you make of what is an excellent macro budget, but no details in terms of, a transfer of incomes to the lower classes, which was what was one of the expectations? First, your overall comment.
No, thank you, Lata. I think overall it's a good budget, a budget of continuity. Over the last several budgets, particularly the last budget, was very well received by the market and investors at large. So continuing the policies of the prior budget is again a positive. There's no major negative in the budget. That's always a positive in itself. There were some concerns of it being a pre-election populist budget that hasn't played out. In fact, as you highlighted very much, the most significant positive of this budget is the budget fiscal deficit estimate of 5.1%. Yeah, so the concerns on populistic budget has been dispelled. At the same time, the capital expenditure outlay has been increased by double digits on back of a 33% jump last year. So within a span of 2 years, a 50% jump in capital outlay that goes a long way to towards building the capital stock or the infrastructure stock of the country. So for an interim budget, I think in 3 succinct points, I would say it's a budget of continuity with big positive in fiscal deficit, at the same time increasing the capital outlay.
All right. Okay, I want to get a word on stock market. Sorry.
Yeah, sorry, sir, please.
Ramdev, to you. See, there are two positives. The immediate positive for people like Mr. Dinesh Khara, the mark-to-market gains on bond holdings. So those kinds of stocks are doing well. But basically, the government is going to pay only 7.07% now. 10 basis point fall in the 10-year benchmark paper. If the government cost of capital is falling, won't it also mean fall in the cost of capital for corporates? So, do you see EPS gains, other kinds of gains for corporates? Your thoughts?
Yeah, so when the interest rate tends to go down and the global environment is also for softening of the interest rate, in that case, the attractiveness of the fixed income vis-a-vis equity markets, that equation further tilts in favor of equity markets. And then if the cost of borrowing for the corporates are lower, the operating leverage will tend to work, financial leverage will tend to work, and for a given growth at the EBITDA level, I think the net profit growth will be a little higher. So higher profit growth, lower cost of money, so a higher multiple, I think that should be directionally positive for the equity markets.
By the way, another pack which should benefit is life insurance companies. I mean, in terms of the fallen yield, mark-to-market. I mean, I think life insurance, I'm not sure if there's a reaction or not, but that's another pack worth watching. Ramdev, how much of this is priced in? That's the question, right? The government over the last so many years has opened up so many sectors. Railways has become pretty big now in terms of, they talked about converting 40,000 wagons into Vande Bharat. So 16 bogies a train, that's about 2,500 trains. I mean, if you go by what we have so far. But I think 1,000 trains, the government has already spoken about over the next couple of years. We have about 40 right now. So it's a big program. Maybe that's has been expanded. We'll have to check. Defense is another area there was some focus on. But the point is, markets price a lot of this ahead, right? So how much of all of this is in the price in that sense?
Yeah, so actually in this budget, there's no specific provisions, at least not in the budget speech. In the papers, there might be some further detail. But since the government has not expanded that big because of fiscal consolidation, there I think total budget expansion is only 5-6%. So in that situation, I think almost like a status quo kind of situation, that whatever happened last year, in the name of Capex. I think Capex is more or less just about 1 lakh crore higher or something like that, from 12.5 lakh crores to 13.5 lakh crores, something like that. So I don't see, and for the 12.5 lakh crores, market is clearly aligned. So I don't see too much of surprises for the markets from that allocation point of view. So they are fully priced. I mean, fully into the budget speech per se has not given any surprise. So today is the day of surprise, and surprise has come from the fiscal deficit number for the 24-25. So I would think that it is more to do with the banks, particularly banks they have been underperforming for last 12 months or so. So I think this might be the turn of this. It's a very large sector. It's almost like the largest profit pool and almost 30% of the market. So if that turns around, you can imagine what it can do.
Yeah, absolutely. The top gains, if you take the CNX 100, Bank of India up 3%, Union Bank up 2.6%, Bank of Baroda up 2%, Canara Bank, Axis, HDFC Bank. I mean, it's the banks who are up and away because of this big gain they will have in their mark-to-market. What you say, Ramdev, about the infrastructure stocks is well taken. I think the market was running away with the expectations that there could be a 20% rise in the Capex bill. It is more like an 11% rise in the Capex bill. As Ramdev pointed out, it's more like 11.1 lakh crore, the central government's own expenditure. Plus, if you take the PSUs, it comes to about 13.5, as you pointed out. It's more or less in line with expectation, and therefore L&T has reduced its losses from, I think it was -4%. It's now come down to -2% in terms of the stock performance. But I think it's in the price that the Capex will benefit them.
I think also the railway stocks, right? All the railway stocks are under pressure right now and selling off quite a bit, IRFC, etc. The railway Capex as well was expected to perhaps be much higher, considering that the expenditure in railways has been the highest in year to date. But that didn't come through. It was slightly lower than expectation. So we're seeing a little bit of profit.
Another such a bumper. You had all those stocks running up 130%, 150%. So now I think it's the day of reckoning.
So this is the interim budget. July we'll get the full budget. Is there a chance we'll get wildly different numbers in July? Or what's the tradition, I mean, here? From the interim to the actual budget?
Historically, numbers have been quite consistent between the interim and the final budget.
Wow.
So you will probably get more of the same. I mean, you'll get more granular detail. You'll get specific tax cuts or announcements. My own sense is that if the market and general economy continues to perform as well as it has through till July, you probably can see a watershed budget again in July. I mean, I would think, given the first year, given where the economy is, given that even this budget seems to have been well accepted by the market. And I think, Lata, the point you made most important, we are completely underestimating the tax collections. We think we will come up significantly higher, and that's really what the bond market is really elated about, because that higher collection effectively means much lower borrowing by the government.
Mr. Kanabar, you wanted to come in, please.
2 points. One is, as Ashok rightly mentioned, generally the final budget really it takes on from this. But given that, assume for a moment that this government is back in power, there will be the first budget they will present for the next 5 years. So I would see a lot of policy changes really come about, and new announcements, new policies, etc. And of course, a lot of tax things. Here we have seen nothing. But normally in any budget, you would see at least anywhere between 60 and 150 changes. So there is nothing here. So all that is for the shape of things to come. And Lata, you were mentioning, a small little point regarding those tax write-offs. Very interesting, nothing really earth-shattering. But for the government to come back and say that if there are old dues right up to 2009, of 25,000 rupees a year, we are unable to trace those people just carrying forward write-off, and then beyond 2009 to 2014, 10,000 rupees write-off. What we'll do is to clean government's books. Today, the amount due to what is collected is a very poor ratio. We'll just improve that ratio.
I think the focus on the budget is it's a very business-like budget. That's to me comes as the word. It's a very business-like budget telling us that I'm getting into a new era of next 5 years. And this next 5 years is going to be very different and very business-like.
Exactly. I think we should get the economists in. Dr. Singh and Dr. Subramanian have been waiting by patiently. First to you, Dr. Subramanian, the numbers, I mean, the assumption is only 10.5%. Okay, that is a conservative. And then you have a conservative tax assumption of 11.9%, which I think is conservative considering that this year we have done well. It's also conservative because this year's number has not been revised higher. if you look at the year-to-date available numbers, taxes have grown by about 14.5%, taking direct and indirect. And the assumption was 11. So they have not revised that higher. So we must expect higher taxes. I mean, your comments on all this, very conservative assumptions, you would say?
So Lata, I think this has been part of the trend. If you've seen the budgets in the previous years, starting from the COVID budget, it has been a case of under-promising and over-delivering. If you look at this year's, the target was 5.9% fiscal deficit, and what has been delivered is 5.8%. Now, to come to the assumptions, I actually think that the 10.5% growth number, nominal growth number, itself is quite conservative. You know, the reason I say that is if you take real growth to be 7% and the GDP deflator to be 4%, which I think should be reasonable given, you know, the WPI, the huge increase 2 years back and then the negative territory last year. The median of 4% deflator, I think, is reasonable to expect. That translates into a nominal growth of 11.3%. Now, I want to make a small correction. The tax buoyancy that is assumed here for a tax growth of revenue growth of 11.9% is actually 1.13. I think that's very conservative, given that if we look at the tax buoyancy has been 1.6 this year, and I've looked at, you know, over the last decade itself, it has been between 1.5 to 1.6. So a tax buoyancy of 1.2 is very reasonable to expect. So my sense is that once again, you know, we will have nominal growth about 11.3%, and actual tax or overall revenue growth will be closer to 13.5%, assuming tax buoyancy of 1.2. So again, I think that 5.1% number that has been promised for FY25, my sense is if we may be actually presented in July. If you just go by the numbers right now, I think it's again a case of under-promising and over-delivering, you know, on the fiscal front in the coming year as well.
Okay, and that's always a good thing, right? From a market standpoint as well. By the way, the market has not moved an inch. It is absolutely flat. I guess it's a very mature reaction because nobody expected too many things to come out of the interim budget. We have Sunita Reddy, who's also joining into the discussion. She's the MD of Apollo Hospitals. Sunita, welcome to the panel. I'll just come to you in a bit. We have Dr. Singh as well, who's been sitting by waiting patiently. Dr. Singh, your views, how would you rate this budget on a scale of 1 to 10? And what do you think is the biggest takeaway, apart from, of course, what we spoke about, which is fiscal profligacy?
Well, let me say this, that I don't want to get into this arithmetic of 1 to 10 business, but I rate this budget as an outstanding response, looking at the impending elections, staying away and steering away from a path of any kind of a suggestion of fiscal profligacy or making it populist, a great degree of confidence that the achievements already speak for themselves. You do not really have to add to that, and a great confidence of what they will do in July. I think few governments which go into an election in the next few months exude this kind of a confidence in the interim budget. This is the 14th interim budget from the inception of our budgetary process, and very few interim budgets have reflected this kind of a confidence. This is one. Second, I fully agree that this is a case of overperforming and under-promising. I think this has been done more than once, and I think that this is based again on the fact of an assurance of continuity in the growth story. I think that definitely both on the real GDP and on the deflator, there may be some room, and I think this is, if anything, really a conservative estimate of 10.5. It will definitely be better. On the revenue, looking at the performance in the last 1 or 2 years, definitely these buoyancy numbers are on the conservative side. As I said, that the GST is improving every month, and this is notwithstanding the fact that we have abstained from making deep rate rationalization, because in the case of GST, there is a very credible case that the GST rates need to be rationalized further, which will give a new fillip on the GST buoyancy numbers. So I fully agree that this is a case of under-promising in the expectation that it will be more than realized in the full budget is coming. This is yet another demonstration of the renewed confidence and the renewed expectations that the government has on its returning to power and returning to office without a shadow of doubt.
Take your point, sir, that they don't even need the prop of unwarranted populist measures or giveaways. That confidence is demonstrated, and that political stability is something which the market will take home. At the moment, of course, in the grip of the FOMC announcement and a 1% fall position adjustments. But I just want to make one more math before I come to you, Sunita Reddy. The tax to date, that is April to December tax collection, is higher by 14.3. And the assumption of the revised estimate full year, they've not taken. That is why I think that there are two good reasons why this year the fiscal deficit is absolutely much lower than what even the numbers that the budget is reflecting at this point in time. They are going to make much more money on taxes. Well, with that, let me invite Sunita Reddy to the conversation. Ma'am, thank you very much for your patience and your first takeaway from the budget.
Thank you. I think all the economists on the panel have spoken about healthy economy, growth, and a very good movement in terms of fiscal deficit coming down from 5.6 to 5.1%. So let me talk about the source of growth, which is the focus on women and maternal health, which I think is very much needed. Cervical vaccination for women, for children from the age from 9 to 14. The fact that we are going to add more medical colleges and therefore get more women into the workforce. And I think overall the focus on women and childcare is something that is going to increase the number of women coming into the workforce. What has really excited us at Apollo is the amount, 1 lakh crore amount kept for research and innovation, which will hugely benefit research, clinical outcomes. And this is interest-free loans for a period of 50 years. So long-term guarantee of better clinical outcomes for the country. And I'm sure that, with this leverage, we will be able to do much more for the country as well as attract international patients to India.
Right.
Okay. That point is well taken. A stable macro and unchanging tax regime, a stable tax regime should be very big attractions. But more importantly, I think it's the macros that usually attract outsiders. Mr. Khemka, what do you say for this? It looks like the cost of capital for corporates in general is likely to fall because the government borrowing rate yield has fallen. How do you approach the market now? Will banks be your favorite because they make money on their bond book? Or will it be across the board corporates because the cost of capital falls?
Certainly. So, see, the banks, particularly the PSU banks and those with big bond portfolios, would benefit to the extent of the treasury gains. But otherwise, on the whole, there were not dramatically different expectations from the budget, given that it was budget of continuity. As we already talked about in case of infrastructure, despite a double-digit jump in the interim budget to the layout, still the infrastructure stocks aren't really reacting, positively. So it's the case of a company where if expectations are already very high, even if the company delivers on a high note and delivers what was expected, the stocks might not react positively. So the outcome in that the market is reflecting today is not surprising in that case. So not any particular sector that I would say which stands to materially benefit over and beyond was what was already factored in at this point, and all the eyes would now be on the July budget, Lata.
Would you be a BFSI bull now? I mean, if you were, I don't know if you were.
So we tend to structurally have much higher allocation to financials, particularly the banking and also the NBFCs, and we continue to be in that position at this time as well.
Dinesh Khara is listening to you, as you say, the banking sector already, most investors bullish on that segment. If we can get K.V. Subramanian in again, Dr. Subramanian, like I've been saying, the assumption of tax collection for the current year is far lower than the demonstrated collection in the first 9 months. The first 9 months growth is 14.3. The budget is assuming a 10.7 growth. I mean, way lower than what has already been demonstrated. What is the usual practice? Will they revise higher in July?
So actually, that is what I expect. The 5.8% fiscal deficit number that the Honorable Finance Minister mentioned for this year, my sense is when the revised estimates will come, it'll be lower than that. So I think the actual fiscal consolidation path will be even stronger than what has been spoken in the numbers that the Honorable Finance Minister mentioned. I actually will mention, you would recall, Lata, that there was a break from the past that was done when off-balance sheet items would be hidden, there would be no transparency. From there, actually, to put everything upfront transparently and to be conservative in projections has been these have been two key changes that have happened in the last few years, and this is a continuation of that, I think, which is an excellent. In general, I'm someone who actually likes governance to be one where you underpromise and overdeliver. And I think emerging out of COVID, that kind of fiscal math, I think, will give a lot of credibility. And hopefully the rating agencies are paying attention. I had written about it when I was in office as a CA. My successor has written about it as well. I think it is absolutely high time that the sovereign rating agencies look at actually their models and modify the rating. The current rating makes absolutely no sense, in my opinion, given how credibly the government has been delivering on the fiscal numbers.
Absolutely. And point taken, sir. By the way, just a quick look at the insurance companies. I think that is the only sort of pack of stocks which is moving on the back of what's been announced. And it's an indirect move, apart from, of course, what's happening with banking and financial services. Look at SBI Life, look at ICICI Pru, look at HDFC Life. Most of these stocks are about 4-5% off the lows from before the budget speech started. Last time, remember, for insurance companies, there was a fair bit of negative and stocks sold off. This time there is no negative, and at the margin, perhaps, bond portfolios benefit. Mr. Dinesh Kumar Khara is still with us.
Just a word on the banks, Prashant. Of course, please go to Mr. Khara, but he would also like to hear. Now the bank Nifty itself is up 0.6, and the public sector banks are absolutely going through the roof. UCO Bank is up 4.6, Union Bank 4.5, Bank of India 4.3, PNB 4.2, Central Bank 4.2, Canada nearly 4%, 3.7, Bank of Baroda 3%. I mean, it's huge. State Bank, the mighty giant, which has already been rising, up 1.5.
Last so many months now. Mr. Khara, you run a fairly sort of large insurance subsidiary, one of the largest insurance companies in the country. Is there a significant impact because of bond yields falling for insurers, life insurers as well?
Yeah, that will also impact them. But the fact of the matter is that what you mentioned about the last budget, there were some kind of restrictions which were imposed in terms of the tax relief for buying insurance beyond a particular threshold. So that was the reason why they had seen some kind of a dip. But this time, overall, when the investment market becomes positive, insurance has got a lot of income which flows through the investment portfolios. So that will certainly be of advantage to them. And in any case, all of them have got a reasonably decent ULIP portfolio. So in the ULIP, when it comes to this debt market instruments and falling interest rate will certainly be to their advantage. So that is the other reason why they can create more value for their insured customers.
Got it. All right. We have Nilesh Shah of Kotak who's joining us into this discussion now. Nilesh, I'll come to you in a bit. I have Sajid Chinoy who's also waiting by. So before we come to you, let me just get a final word in from Sajid. Sajid, there are no SOPs or big rural transfers that were announced this time around. So some of these FMCG stocks have come under a bit of pressure, but I guess it's good to see that there are no major populist measures despite it being a pre-election budget. What is your take on how things on the rural side are going to shape up? Because clearly this has been a pocket that has struggled, at least for the last 4 to 5 months. Do you expect something big to come through in the main budget in July?
I was just saying earlier, I think the effectiveness of policy is to be counter-cyclical. And I think what today's budget has done is to demonstrate that counter-cyclicality is symmetrical. I think the need of the hour was to bring the deficits down, given where starting points were. The need of the hour was to ensure that capital expenditure was not withdrawn. So we've seen that maintained as a share of GDP. And of course, the welfare support will need to be targeted. Now, just a couple of quick clarifications. Lata had brought this up. If you look at gross tax to GDP, that has been budgeted much higher in the RE compared to the BE. But net taxes are lower because the transfer to the states is higher. So we have to be cognizant of that. Number one. And number two, for next year, the accounting is conservative. Nominal GDP of 10.5, one should expect a buoyancy of higher than 1.1. What that will do is let the deficit be consolidated more on the revenue side than the expenditure side. Currently, if you look at next year's B, most consolidation is on revenue expenditures, which from a quality of expenditure perspective is good. But if you do end up getting more tax buoyancy, and I've been harping on the asset sales for a long time, if in the July budget there's a focus on asset sales, then essentially you can get more consolidation on the revenue side and protect expenditures even further. But the accounting in general has been very conservative. The need of the hour was just to double down on a fiscal consolidation path, which I think this budget has done very effectively without compromising capital expenditures.
All right. Well, in fact, Nilesh Shah is also joining in. So let me get his thoughts in. Nilesh, as Sajid was saying, the need of the hour is to double down on fiscal consolidation. And that's pretty much what the government has done. You think it's a win-win situation from here on? And from a market standpoint, is there anything in the budget that can help the market see incremental gains?
So one, the fiscal consolidation path given by the budget is way ahead of the street. No one was expecting 5.1% fiscal deficit. Hopefully that will give confidence to the market.
Fine.
Second, on infrastructure allocation, there was fear that this year maybe the allocation will not be enhanced as much. 11.11 lakh crore on the revised estimate of 9.5 lakh crore is a 17% jump. That's fairly positive. And overall, clearly, our economy today faces two challenges. One, consumption at the bottom end of pyramid is not growing as fast as the top of the pyramid. And private sector Capex is not growing as fast as the government Capex. In this budget, at least there is supply side availability for private sector Capex. Net borrowing program aided by debt FPI flows will leave enough credit in the banking system and market for private Capex. And some of the steps announced on housing, fisheries, agriculture will hopefully support consumption at the bottom end of the pyramid. It will be fair to say that markets will be satisfied with the vote on account as it achieves the impossible trinity of creating inclusive growth, spending on infrastructure for future, and yet maintaining path of fiscal prudence.
Well, I must point out to Dr. Subramaniam, to Sajid, to Nilesh, you as well. The amount of bonds that are getting redeemed this year is 2.7 lakh crore. When I say this year, I mean FY25. So we were expecting a 2.7 lakh crore difference between gross and net borrowing. It's actually the difference is only about 1.2 lakh crore. What I understand is the entire compensation, GST compensation cess, is being used to redeem those bonds. So the difference between gross and net is not the assumed 2.7 lakh crore. It's much less. It's half of that. The other half is being taken from the compensation cess fund of the GST. That's just by way of information. We are getting it as we read the fine print. So net. Yeah, go ahead, Nilesh. Yeah.
But there is also possibility that there will be a switch between government and the RBI in the days to come. And that would reduce the net borrowing program probably.
No, the switches have been announced at 1 lakh crore. That is also there. But I think this is separate from that. And that explains why the borrowing is so attractive for the market that you're seeing the bond prices jump, because they are not going to borrow from the market, but adjust it from the compensation cess. Sunita Reddy, if the cost of capital falls, do you see that as an attraction for investment? Already, hospital chains and healthcare is a burgeoning sector. Do you think if the cost of capital falls, cost of money falls, that is a very big, injection, fuel injection for you all?
Yes, certainly. I think that especially at Apollo hospitals, where we're looking at adding over 5,000 beds, the cost of capital is key, and it will bring down the cost per bed. And therefore, I think the whole country will benefit from this, and our sector especially.
Yeah, Prashant Khemka is also with us. Prashant, afternoon. You know, I'm sure your team must also be feeding you information in terms of what they are doing as the speech comes through. Although it's interim budget, it was short. Anything actionable which you've kind of discovered? I know you're not a very short-term kind of a sort of a person in that sense and how you operate the fund, but anything strikes you across sectors?
No, thanks. Thanks, Prashant, for the question, but nothing really exciting necessarily from the budget that would prompt any action. I think we do spend time analyzing and understanding what the longer-term direction of the policy is. And what we've discussed so far is that it's a continuation of what was laid out last year and what has been the direction over the last 10 years. So there's that in itself is a big positive and would be very well taken by investors, particularly the global investors. Nothing in the budget that negatively surprises, and it's the message of continuity, which is a very good message.
Okay, Prashant, will you all be positive on the public sector stocks, the ones that already ran up a goodish bit, but is there any juice left in any of them?
So again, see, in a portfolio that is constructed with in a manner that doesn't necessarily trade in and out on a daily basis, 2-3% move is not something that would prompt action. As I was saying earlier, BFSI, which is the most significant beneficiary of the most significant positive of this budget, which is the fiscal deficit estimate coming at 5.1, that it's already is a very big, the largest allocation in our portfolio. Structurally, it has been the largest allocation of the portfolio. So in a way, we find ourselves in a position that we might have brought ourselves into if we weren't already there. So as a result, there's nothing that we believe at this time, at this point, on an incremental basis, we need to do.
So we are itching to go to the CII because they will be, best placed to say what they can do with the cheaper cost of capital. But Shireen, before I come to you, just one word from Nilesh Shah. Nilesh, does this make debt attractive? Debt was the stepchild, debt mutual fund was the stepchild of the previous budget. Now with bond prices rising, is there a macro-oriented positivity in debt funds?
So undoubtedly, there will be some catalyst, but we still need to deepen our bond market. It's a work in progress for long. And debt mutual fund to grow will also require some sort of support or level playing field. Today, if you invest in NPS and you are a salaried employee, you get 10% tax exemption. You get tax exemption up to 10% of your salary. At the highest level, that's 3.9% incentive. In insurance, some tax concessions have gone, but below 2,50,000 rupees, there is a tax incentive. So debt market will need to be deepened, and debt mutual fund will require level playing field before investors actually start allocating to debt mutual fund.
Absolutely, and easing bond yields should also give some relief to borrowers, right? Home loans, personal loans, etc., which will eventually lead to higher disposable income for individuals. So that's a positive as well. Thank you for that. But let's toss it across to Shireen now. Shireen, back to you.
Well, thanks very much, guys. And, we were just talking about this with KV Subramanian. What does this mean now as far as the monetary policy is concerned? We've got one coming up in another few days. What kind of room does this make available to the MPC?
I think I would say ample. Primarily two considerations. One, of course, the global environment. And this is something that we discuss in the fund very regularly. If we look at the overall inflation trend globally, it's been coming down, and that will prompt monetary easing by several other central banks. I think the Fed and ECB should be this year, lowering interest rates. Together with the I think that the very judicious policy mix that has been adopted in this budget with a strong fiscal consolidation, which I actually think will be stronger than what has been announced, given the very conservative assumptions, that leaves ample space for monetary policy to loosen. And my sense, I was hearing some of the discussion on the banking stocks expanding. My stance is that the yield curve with the risk-free yield curve coming down, and then that will mean lower cost of capital for a lot of borrowers.
Yeah.
It should increase the supply of bank lending, and that might be the part that is actually getting reflected in the banking stock.
Yeah,
but overall, I think just to reiterate what I said, JNV, which is it's a judicious budget, it's a non-populist budget, and it's a visionary budget.
Well, the MPC will meet, so we will have to wait to see what is delivered. But the governor, in his conversation with me just a few days ago, made it very clear that there is no question of acting on a rate cut just at this point in time.
May not be immediately, but later.
Yeah, sure. Sunil Bachani, many thanks for joining us. The budget came early for you because the cut in tariffs from 15% to 10% came a day ahead of the budget. But overall, on balance, what do you believe this does now in terms of consumption, in terms of demand?
Yeah, I think first talking about the steps which were announced yesterday, a day before the budget, I think the finance minister has sent a very clear signal that when it comes to manufacturing for the world, India is the place to be. And I think just to explain what these duty cuts actually mean to the industry, I think they're very significant because first, what they do is that they improve the competitiveness of the Indian industry as far as manufacturing for the domestic market is concerned. Two, I think these duty cuts will also help expand the market for mobile phones because obviously these duty cuts, will be passed on to the consumers.
Yeah.
And I think they're quite significant. So I think definitely it'll give a huge boost to the mobile phone industry in terms of consumption. And we've seen that the market has not been really growing, in the last couple of years. So I think this is a very positive step. And I would say this also, helps in our global competitiveness because even though the philosophy, the policy is that we will not export our duties and taxes, but eventually when the custom duties are high, and the tier 2 and the tier 3 suppliers do not get a refund of these duties, we end up exporting these taxes and duties. So the lower duty structure would also mean better competitiveness in the global markets.
Well, yes, that certainly is the hope. But, in terms of private Capex, there were, of course, allocations, etc., made for semiconductors and so on and so forth. But given where you find yourself in terms of demand visibility and now to push the export story, including the domestic story, Capex at this point in time, would you need to put in any fresh money?
Yeah. So, Shireen, I think if you look at the Make in India policy, I would call it Make in India 1.0. I think it's been very, very successful in our industry, which is the ICT industry. And the numbers definitely speak for themselves. If you look at the total consumption of ICT products, which includes mobile phones, laptops, and all appliances and TVs, the total demand is about $130 billion. And it's probably for the first time that almost $100 billion worth of goods, of ICT goods, were manufactured in India. So I think now what is a domestic demand. The first level of manufacturing was done in India. And now I think what we need is a very strong and robust component ecosystem to make this sustainable. So I think as an industry and as a company, I think we would see now Capex coming in into the component side of it, and also definitely the semiconductor. But of course, the first step would be the ATMP. And of course,
so what are we talking about? Ballpark Capex numbers?
Are you talking about Dixon?
Dixon specifically,
yeah. I think if you look at the last couple of years, it's been around 350 crores. This year we'll end up probably at around 500 crores. And I think next year will definitely depend on the projects, some of the projects that we're working on, which I won't be able to talk about right now. But I think if we leave that aside, I think the numbers will be similar, around 500 crores.
Well, on that note, we are going to have to listen in to what the Prime Minister is saying. He is addressing the media post the budget.
Inclusive और इनोवेटिव बजट है. इस बजट में कंटिन्यूटी का कॉन्फिडेंस है. ये बजट विकसित भारत के 4 स्तंभ, युवा, गरीब, महिला और किसान सभी को एम्पावर करेगा। निर्मला जी का ये बजट देश के भविष्य के निर्माण का बजट है। इस बजट में 2047 के विकसित भारत की नींव को मजबूत करने की गारंटी है। मैं निर्मला जी और उनकी टीम को बहुत बहुत बधाई देता हूं। साथियों, इस बजट में युवा भारत की युवा आकांक्षाओं का, भारत की यंग एस्पिरेशंस का प्रतिबिंब है। बजट में 2 महत्वपूर्ण निर्णय लिए गए हैं। रिसर्च और इनोवेशन पर 1 लाख करोड़ रुपए का फंड बनाने की घोषणा की गई है। बजट में स्टार्टअप्स को मिलने वाली टैक्स छूट के विस्तार का भी ऐलान किया गया है। साथियों, इस बजट में फिस्कल डेफिसिट को नियंत्रण में रखते हुए कैपिटल एक्सपेंडिचर को 11,11,111 करोड़ रुपए की ऐतिहासिक ऊंचाई दी गई है। अर्थशास्त्रियों की भाषा में कहें तो एक प्रकार से स्वीट स्पॉट है। इससे भारत में 21वीं सदी के आधुनिक इंफ्रास्ट्रक्चर के निर्माण के साथ ही युवाओं के लिए अनगिनत रोजगार के नए अवसर तैयार होंगे। बजट में वंदे भारत स्टैंडर्ड की 40,000 आधुनिक बोगियां बनाकर उन्हें सामान्य यात्री ट्रेनों में लगाने का ऐलान किया गया है। इससे देश के अलग अलग रेल रूट पर करोड़ों यात्रियों में आरामदायक यात्रा का अनुभव बढ़ेगा। साथियों, हम एक बड़ा लक्ष्य तय करते हैं, उसे प्राप्त करते हैं और फिर उस लक्ष्य तय करते हैं, उसे प्राप्त करते हैं और फिर उससे भी बड़ा लक्ष्य अपने लिए तय करते हैं। गरीबों के लिए हमने गांवों और शहरों में 4 करोड़ से अधिक घर बनाए। अब हमने 2 करोड़ और नए घर बनाने का लक्ष्य रखा है। हमने 2 करोड़ महिलाओं को लखपति दीदी बनाने का लक्ष्य रखा था। अब इस लक्ष्य को बढ़ाकर 3 करोड़ लखपति दीदी बनाने का कर दिया गया है। आयुष्मान भारत योजना ने गरीबों की बहुत मदद की है। अब आंगनवाड़ी और आशा वर्कर, उन सबको इस योजना का लाभ मिलेगा। साथियों, इस बजट में गरीब और मध्यम वर्ग को एम्पावर करने, उनके लिए आय के नए अवसर बनाने पर भी बहुत जोर दिया गया है। रूफटॉप सोलर अभियान में 1 करोड़ परिवारों को सोलर रूफटॉप के माध्यम से मुफ्त बिजली प्राप्त होगी। इतना ही नहीं, सरकार को अतिरिक्त बिजली बेचकर लोगों को 15 से 20 हजार प्रति वर्ष की आय भी होगी और ये हर परिवार को होगी। साथियों, आज जिस इनकम टैक्स रेमिशन स्कीम की घोषणा की गई है, उससे मध्यम वर्ग के करीब 1 करोड़ लोगों को बड़ी राहत मिलेगी। पिछली सरकारों ने सामान्य मानवी के सिर पर दशकों से ये बहुत बड़ी तलवार लटका कर रखी थी। आज इस बजट में किसानों के लिए भी बहुत महत्वपूर्ण और बड़े निर्णय लिए गए हैं। नैनो डीएपी का उपयोग हो पशुओं के लिए नई योजना हो, पीएम मत्स्य संपदा योजना का विस्तार हो और आत्मनिर्भर ऑयल सीड अभियान हो। इससे किसानों की आय बढ़ेगी और खर्च कम होगा। मैं एक बार फिर सभी देशवासियों को इस ऐतिहासिक बजट के लिए शुभकामनाएं देता हूं। बहुत बहुत धन्यवाद।
Well, that is the Prime Minister there on the budget speech that's been delivered by Nirmala Sitharaman, her sixth budget. We've got a packed house here at the CII. Gentlemen, I have to say, Nirmala Sitharaman, speaking to you as CII, had made it clear this is going to be a vote on account. She's delivered on that. Perhaps one of the first few finance ministers really sticking to the script on what a vote on account is and what a vote on account should be. Dinesh.
Yes, totally agree. As you said, it was on our event where she mentioned this. I think she has walked the talk. But equally so, she has given the direction in terms of what it's going to be. So I think that's great.
Oh, absolutely. She made it very clear we're coming back for the next 5 years. So that pitch was made. But Rajiv Memani, nothing for you to do today. No changes as far as direct or indirect taxes are concerned. But, you know, we were discussing the fiscal conservatism, and that was the point that you were making as well.
Yeah. So I think just to answer on your first point, I think it's this is a budget of a very confident government, both politically and economically. So no big softies announced. Just a very good articulation of what they've achieved, of what they've done over the last 10 years, and then a broader vision of what they intend to do going forward. And even if I look at the macroeconomic thing, all of us have been covering and seeing the tax growth. Direct tax growth of almost more than 20%, indirect tax growth of 11%, actually GST growth of 11.5%. So everyone was estimating that the revenue, the tax growth this year will be higher than budgeted, and the expenditure will also be higher than the budgeted.
It's actually lower, a little bit lower.
Both of them are slightly lower. So my guess is when we eventually end up, and the gross number and the net number. So I'm assuming they are doing a lot of refunds will be given in the next few months. And next year, what they've assumed is that the gross tax revenues will be 11.5% growth and the net tax revenues will be 12% growth. So, I mean, we are threading, but I think overall just a lot of conservatism, or I would say realism, built in the numbers. So there's enough cushion. We are living in a world which is volatile, uncertain. So there's enough cushion that's built in. And they've always delivered in the last 3 years on the numbers that they've said. So this 5.8% to 5.1, my presumption is maybe lower than 5.8%, the budget, but coming down to 5.1%, I think that's really great.
Yeah, that was the point that KV Subramanian was making as well, that the 5.8 number is likely to be lower as well. But this point about delivering on the numbers, and that's a valid comment coming in there from Rajiv Memani.
In fact, actually, an aspect that I want to highlight is that, even if you look at the previous vote on account, 2019, many people reckoned that the PM Kisan was a populist scheme. At that time, I actually had said as well that it'll bring in investment, and as I've said, research by Pulak Ghosh has demonstrated that. Yeah. So the theme that I want to say is that this government actually has shown judiciousness, not profligacy in an election year, even previously. So this is consistent with its theme. It's not different at all compared to, and I think that reflects the overall, and having had the privilege to work very closely with both the Honorable Prime Minister and the Honorable Finance Minister, this reflects their themes. They actually think about, about running the economy well, and handing it over to the next government, which quite likely is going to be them, but is still handing the baton over in a very judicious manner. So the non-populist part and the judicious visionary. I will emphasize once again the R&D part. I think not too many people have paid that much attention, but I think that is a very important stem which ties in with the equivalent of the National Science Foundation that was actually announced in the 2019 budget, and I think steps have been taken to action that. When you put the two together, I think that can be a big big idea really in the budget. Innovation fund. Yes,
yeah, the innovation.
1 lakh crore actually, and that's 50-year money. So
industry 50 years is
in fact, see, having some of my early research was on innovation, and gestation periods are long, so 50 years actually, but not 50 years. So that's a very large, very, very important step.
Yeah, CB?
No, I think, again, it's a prudent budget. I would think it's prudent because of the fiscal, what we talked about, the borrowing part of it. And I think that really puts in a lot of ease into both the real and the nominal interest rates. I would think that's going to be very critical. And I really like the texture of the spending in terms of while we can.
We needed Vinayak back. Because Vinayak had said here on CNBC TV 18 that 13.5 lakh crores will be the number, but of course it is lower than that. Still, if you look at it over the previous year as well, it is a significant growth.
It's a significant growth, number one. And number two, if you really look at the way it has been balanced over physical infrastructure and the social infrastructure and really going into the rural housing and rural infrastructure, I think that's very, very critical and important.
Well, let me also invite Sanjeev Puri to join us here at our CII budget headquarters. Sanjeev, many thanks for joining us. As you take your seat, from a consumption point of view, from an FMCG perspective, what do you believe the budget is delivered? He's sitting. No time to sit. No time to sit.
That's the usual.
Hit the ground running.
So you see, consumption, of course, is an outcome of the manner in which the economy progresses. It's one facet of it. And what we have seen is consistency of vision and strategy and really laying down the roadmap for execution. That's what we've seen in the budget. And the whole focus is on creating productive deployment of resources. And with all that is being done, for example, in certain agriculture sectors, in the housing sector, in the rural, and I'm sure the public Capex also will find its way, its fair share, more than its fair share in rural. There's also the support to the state that is coming in as far as infrastructure. That also has a footprint in rural. So I think all of that over time should enable or strengthen the virtuous cycle so that we start getting uptick in consumption.
On consumption, Sanjeev, is there concern because the expectation was that at least in the hands of the farmer, in the hands of the rural economy, the disposable income would perhaps be enhanced by way of additional sweeteners. That has not been the case. Even PM Kisan, which was widely expected to be enhanced, has not happened. So what does that mean then as far as volume growth is concerned? I mean, are we to contend with a volume growth of 2 to 4%? Is that what we should continue to budget in?
You see, look, as the economy progresses, it's a matter of time when consumption will pick up. So I do not see any reason to believe that is going to be the trend. It's a matter of time when it will pick up. See, whilst you may find that direct money may not have been specifically called out, but there are many avenues that will create productive utilization of the human capital in rural areas, that will pump in resources into the rural areas. I think once agriculture gets competitive, incomes will improve. The fact that you are having Lakpati Didis that will have a footprint in agriculture, there are a lot of them actually can become village level entrepreneurs to support agriculture. Rural housing will create employment. So all of that is potential. Even when you expand the coverage of healthcare, ultimately the discretionary or the incomes in the rural end also go for health. If you kind of provide it in another fashion, then the rest of the money is available. So I think the deployment of resources in rural has been done in a more productive fashion, following the themes of the prior years. So over time, I'm sure it will lead to an uptick in consumption.
Yeah, you want to make
I just want to actually bring out, if we look at overall the rural economy, the fact that the spending on Manrega has declined, because we know very well Manrega is distressed, is demand-based, and it's higher when it's distressed, when the rural economy is distressed. The fact that that is not happening is actually symptomatic of the fact the rural economy is doing fine. One more aspect, and I think which is something that I think economists need to pay far more attention. I mentioned it earlier too. If you look at the participation rate of women, that has increased by almost 15 percentage points in the rural areas, and that is in a space of just 5 years, 15% from about 25 something to 40, I think that's phenomenal because, and the reason it has happened is because now women have more time from the productivity. They actually need less time to cook. They don't need to go as far to actually bring water, etc. And that is also, reflective of the strength of the rural economy. So I think what the government is basically seeing is that there is no need for, as such, at this point in time, an additional impetus, given all the PM Awas Yojana, the Manrega, all these actually that are already working well.
Yeah. So I just wanted to add 2 points to what has been discussed here. So if you look at this government, I think from even during COVID and post, their focus has been on making sure the spending is for productivity increase and inclusive growth. So rather than actually put money into the hands of the consumer, they have made sure that the consumer or the society becomes more productive, thereby getting more money. So if I look at the 2 other aspects to whatever we spoke about, one is the focus on MSMEs and especially their transition for both sustainability and also the making sure that they can transition properly into the digital growth. So if I look at these 4 or 5 pillars coming together, then I think going back to Sanjeev's point, it will have a trickle-down effect to both the rural and the economy to aid consumption.
If I could just add one more very important point, a very innovative step being taken, this whole facet of incentivizing reform at the state. You see, that can unlock the potential of agriculture also. That's similarly, there are other reforms that in fact are awaiting last mile execution and very progressive reforms. So I think that also will unlock the potential of the economy. And that's, I think, a very, very positive development.
So I think one other area which we should really focus on, especially when it's coming with the global challenges and where we talk about SME and Indian manufacturing, is the focus on both technology and R&D and green manufacturing. And I think that's going to be very critical. And the fund type of when we are talking about a 50-year fund and encouraging even the small scale to transition to a green, I think that will be very, very critical for when we look at a very strong, robust, connect with the global supply chain.
No, so gentlemen, at the end of this now, let's talk about private capex. Sanjeev, let me start by asking you, what should we expect now in terms of private capex? We've been talking about incipient signs for a while now. Are we likely to see private capex
pick up? The situation on the ground as far as domestic is concerned is fine. The global situation is very weak. So we have a little bit of a mixed bag, but capacity utilizations are up. I think all the macros favor investment because there is liquidity, balance sheets are good, health of financial sector is good, corporate income tax have been rationalized some time back. So I think all the enablers are in place and it is already starting to pick up. Things related to infrastructure, cement, chemicals, pharmaceuticals, the industry that I come from, multiple industries, we are seeing investment. Tourism is seeing a lot of investment from hotels. Real estate is seeing a lot of investments, right? So it is already starting to happen. It could have been faster if the global situation was better. But I think as we move ahead, this will only, I think the finance minister also today acknowledged that in the speech.
Every time you say that the capital outlay and the capex has been increased in the budget, but when will private sector? Today you had the acknowledgement of the private sector already started doing that.
But I would say even the strong capital markets. I mean, India has had the largest number of listings, and I think so the capital provision also that's required, the confidence that's required, a lot of that has gone to pay down debt. So, I feel pretty confident that the investments will happen, and I think it will be led obviously in the existing sectors, but this entire energy transition that's happening, whether it's electrons or green electrons, green molecules, I think that's going to be the big bucks where the big.
But the 15% sunset extension that hasn't come through, and we didn't hear her say anything on FAME specifically, though she did talk about electric mobility.
Yeah. So I think that I would say amongst everything, if you have to pick up one thing which I was expecting, which would happen, hasn't happened. They have extended for sovereign wealth funds. They've extended for GIFT, IFSC, and others. So all those things they have done. But I think this one is one area where we were all anticipating that they would do, given the lift that's happening in manufacturing, which is not happening.
Yeah.
Just I think 2 data points here. I wouldn't actually call the private capex, incipient, because if you look at the data, capex by corporates, and this was, the CA's report showed that it increased by 28% in, FY22, 23% in FY23, and 10% in the first half of the year. So, that is demonstrative of, capex coming. And one more, with some caveat on the, on the deflate. If you look at the gross fixed capital formation to GDP in real terms, not in nominal terms, that is touching 35%, which is also a good sign. The other third indicator which I would actually mention is if you look at non-food credit, take personal loans out of that, that is increasing at 13%, and I think that is for sure would be going into private capital expenditure. My sense is that whatever uncertainty there is, actually corporates are waiting for the elections. And here I would want to mention, this is a sort of a clarion call to the corporates, to not look at the global situation that much. India has clearly shown, in a global economy which is struggling to grow at 2.5%, Indian economy is growing at 7%. So why should the corporates wait and watch for global economy? Go and invest in the capex now.
Go and invest in capex now. Forget about what's happening in the world.
Yeah.
You've got enough working for you here as far as domestic demand is concerned. Rajiv Memani, from what we've heard now and the journey to June or July, whenever we see the final budget, what could the expectation be?
No, I think people will look at the March numbers. I think most of us feel they'll do better in March. Like the RE is always better than BE, and the RE2 is always better than the RE1. So I think the numbers will be better. So hopefully they'll have more fiscal space, and if they can address and work on some of the issues which don't have a budgetary impact but will have an impact in terms of ease of doing business, ease of paying taxes, which the government has done a great job of. I think that'll be great, and continue to invest in technology. One of the reasons why personal tax collections have gone down is the number of people who get SMSs between 15th March to 31st March saying that your ASI data or your data is showing X, your return is showing Y, do you want to revise your assessments, or have you fully filed this? Are you fully, in end of December, end of March? And I think if they continue to do the analytics, continue to invest in technology behind it, they've assumed 12%, but I'm hoping that the actual revenue collection is even higher, giving them more space to extend and spend more on the capex side.
Speaking of capex, and again, ladies and gentlemen, our reporters are working the field, and this is a story that my colleague Sapna Das has just broken. Remember, the OMC, the capex for oil marketing companies of 30,000 crore rupees, it has been revised lower, and it's been deferred to FY25. OMCs will raise funds after the 31st of March, so that's important. As far as oil marketing companies are concerned, they will defer their fundraising plans to FY25. The interim budget has shifted the OMC capex to FY25, and OMCs have sought a lower capex of 15,368 crore rupees for FY24 versus the earlier budget aim of 30,000 crores. So that's as far as the oil marketing companies are concerned. And of course, lots of fine print coming in at this point in time. So, gentlemen, on balance, before I let you go, CB, I'll start by asking you, sixth budget, she's created history, the second finance minister after Morarji Desai to do so. How would you sum up Nirmala Sitharaman's sixer?
So I think it was a good success. It crossed the stadium, if I can say in a way. But more seriously, I think I like the prudent approach. No shocks. The entire feeling of a predictability, both in the taxation front, that was very important. And I really liked, and I repeat, going back, when you talk about manufacturing, capex, what I like is the focus that India is doing today on, say, biomanufacturing, which came in, the focus on EVs, and therefore one sees newer avenues of the way we encourage green manufacturing, and that's going to be a very, very important trend which is coming out of the budget as I was looking at it. And I see definitely it a lot now that would need to be done is to take it to the states, and I think lot of work there because the states have got a great opportunity being focused on agriculture, but it needs to be taken forward in a great way as far as states are concerned.
K.V. Subramaniam.
As I said, my first words, I'll repeat that, JNV, ambitious, non-populist, visionary, reflecting a confident, resurgent India.
Consistent, equitable, gives the right direction for the main budget.
Sanjeev.
I would go along with that, consistent and delivered on ticked all the boxes, and ticked all the important facets for building competitiveness, growth, also looked at inclusive growth, sustainability, and more importantly, again, I will emphasize, is also touched upon the very important element of reform at the state. So all in all, an excellent budget.
Rajiv Memani, I'll give you the final say.
3 C's, credible, consistent, confident.
3 C's, credible, consistent, confident. We've got J and Y competing with the C's.
But I must mention, actually, for the first time, 3 C's are being used in a positive way.
That is true. That's true. Let's not go down that road. That's a whole other story. Gentlemen, appreciate you joining us here on CNBC TV 18 at the budget headquarters. And of course, we will look forward to seeing you again later through the day. But Sonia, the markets at this point in time slightly lower. The story on the Sensex.
It's actually very, very quiet. I think it's been a status quo budget, largely, you'd have to say, and that's something that the market has taken in its stride and has perhaps moved on now. If you look at it, the Nifty is very, very flat. The mid-cap index is under a bit of pressure, down about 400 odd points. And, we have Rahul Arora joining in here, CEO of Nirmal Bang Equity. So I do want to get him on board. But just for the people who've joined in late, the one thing that stands out as a big positive is the glide path to get the fiscal deficit below 4.5% by FY26. That will continue, and the government is firmly committed to that particular fiscal glide path. So that's the big positive. But apart from that, it seems to be largely a status quo budget, if you'd have to call it that. In fact, no rural SOPs, etc. The government has resisted the temptation to go populist in a pre-election budget, which is always a good thing. But Rahul is here with us. Rahul, your key takeaways, and from a stock angle, anything that stands out for you?
In a very tacit sort of way, this is kind of an election budget. I think if you look at Manrega going up from 60 to 86,000 crores, directly targeted at rural. So that will be a benefit, and I assume the rollouts will be very soon. And the interesting part is that 1 crore taxpayers that had disputes outstanding up to 25,000 rupees, they're gone. Just like that. So somewhere tacitly they have, it is a very soft touch at an election budget, if you will. And she's given the market what they wanted to hear on the fisc, right? So she's gone with 11% on Capex. She's spoken about 4.5% by FY26. She's ensured that the bond market will be stable. I think the yield should probably be hovering between 6.9 to 7.1% for the better part of the year, as this allows the RBI to cut rates, depending on what the Fed does. So I was just talking to my economist and I said, okay, what's the view now? So she thinks there is a good chance of a 50 basis point rate cut in the next fiscal. And I think the Fed may act in accordance as well. Maybe they'll take the first move. But I think she's given the market what they wanted to hear. She's tacitly hinted at an election. And I think she's kept the larger buzzwords of, green energy, EVs and so on and so forth also intact.
Homes.
Absolutely. 2 crore homes. And that will obviously benefit the affordable housing and anyone that's, doing affordable housing. So, I mean, of course, you'll have to see how asset qualities and margins move. But, people immediately may get, excited about the Avases and the Aptuses and the Home First and the LIC housing finances of the world. But just on this, can you assume that all of these guys will grow at 20% plus? I don't know. But net, as she said in Hindi, in the next budget, she will lay the foundation for a Viksit Bharat. That it'll be very interesting to see how they begin that journey. Because I think, Sonia, just in conclusion, I'd like to say, if you look at the last 10 years of this government, right, it's been a lot about regulation through DMON, GST, RERA, IBC, NCLT, bankruptcy, all of that. Then, of course, as any head of state, he had to contend with COVID. But then after COVID, he spent a lot of time balancing external sector, our relationships in the world. He's made a lot of trips across the world to secure relationships, right? And then the Ram Temple has opened. So I think if you look at from a macro standpoint, what could the next 5 years entail? It has to be about development. So I think the next budget could probably land up being the biggest and the best budget of this government that they have had since inception, because everything that he was voted to do in power over the last 10 years has been done. And there's nothing else to do but focus on the economy right now. So the big call to ask is, can the Nifty potentially be at 50,000 by the time you go into the next election in 5 years, which is about a 15-16% compounded number, maybe a little higher than that. My sense is he's going to lay the foundation of that in July.
All right. Okay. Well put, Rahul. And we very much. The Nifty Bank has, by the way, come off and given up pretty much all gains. And like we've seen over the last couple of days, it's not private banks, it's only public sector banks which are doing well. And why not? I mean, there is, of course, this mark-to-market and bond gains. But also, I mean, just look at third quarter earnings for PSU banks. There is potential for earnings upgrades. None of that for private sector banks, where there has been, at margin, more disappointments. So let's talk about some of these individual names. Aurobindo Pharma, for example, is one which is down sharply, I think, recovered a little bit from the day's low. Sources say that its unit 4 facilities being inspected by the US FDA. Ekta is here with details. Ekta.
Thanks for that. Well, yes, sharp reaction which is coming for Aurobindo, and the rumor is that the street seems to be concerned about this Unit 4, which is currently getting inspected by the US FDA. Now, my sources have told me that the inspection did begin last week, and there are some concerns that maybe it could probably not be going as well as what was anticipated, though that is not confirmed by the company. Now, this Unit 4 is an important plant for the company. I'll come to that in just a bit. It does manufacture injectables as well as ophthalmics, and is a part of the Eugia Specialities arm, which is basically the injectables arm of Aurobindo. This particular Unit 4 was transferred to Eugia in 2021 and was after that called Eugia 3, which is basically Unit 3. Now, it has around 105 drugs which are approved from the facility and 31 drugs which are pending for approval. So it's one of the most important facilities for Aurobindo when it comes to fresh filings as well as current drug approvals. We don't know the outcome. The company has given a clarification to the exchanges. They did not comment on our story specifically, but they did say that the US FDA inspection of Eugia 3 has not been concluded yet. They will inform the exchanges about the outcome once the inspection is completed. So let's see what the outcome of the inspection is and what the remediation pattern, if any, would be undertaken by the company.
All right, Ekta, thanks a lot for that. Well, Godrej Consumer is really one of the stocks of the day, 10% higher on the back of strong Q3 numbers. Mangalam is here to give us the fine print. Mangalam, over to you.
Well, it's a record-setting, move that we've seen in Godrej Consumer. Double-digit gains is what we're seeing. Impressive domestic results. And it's not that the street was caught off guard, because the company had given the third quarter update as well. But what really stood out this time around was a solid operational performance, sharp margin expansion. And of course, overall, year on year, the revenue optically looked lower because of the LATAM currency impact itself. So the revenue at 36,660 crores is actually better than street expectations. EBITDA 841 crores. The street was working with a number of just around 799 crores. And the net profit was above expectations as well. Domestic organic volume grew 5% versus a poll of 4 to 5%. And if you include the Raymond Consumer Care brands that the company acquired, volume growth was 12%, which again is best in class. Importantly, the company continued to spend on ads. And if you just take a look at the geographies and categories as well, in the key category, home care grew about 5%, but the two big positives are the new launches that the company has done. In household insecticides, a business which has not been doing too well for them, the company said they're on track and they've launched Goodnight Agarbatti in January. Now, earlier, in the insecticide space itself, a lot of the unorganized market share was going to the Agarbatti space, and in which Godrej launching this tells you that there is an increased total addressable market of close to 1,200 crores, in which they do have exclusivity to that molecule itself. They've also launched a disruptive Fab liquid detergent in South India at a disruptive price of close to around 99 rupees per litre. So all these things are doing well for Godrej Consumer, and the stock is understandably excited in today's trading session.
Okay, well, that's a big move, 7.5% on Godrej Consumer. Mangalam, thanks for that. Oil marketing companies, this capital infusion of 30,000 crores has been revised lower, and there's also been a deferral to FY25. Sapna is here with more. This is the investment plan that they had. Sapna, over to you.
Yeah. So what we have understood is that basically it's the oil marketing companies who had sought a lower amount. However, in the current financial itself, so 30,000 crores was the original allocation. Some around 15,000 crores had been sought. But, the companies have taken this call. So basically looking at their own cash flow projections and their own requirements, it now stands deferred to FY25. So that's why the Capex has been shifted. The OMC Capex has been shifted from this year to next year. And the companies will now go ahead with the fundraising plans only after March 31. So this is like basically to put these numbers into context and the timeline into context, because the numbers do look it's almost like 50. They're almost lower by 50% odd. So the question does arise that was this a cut on by the government, or the industry feedback has come? So it's a combination of both, looking at the overall numbers and plus the requirements of the OMCs. Two aspects here: a lower capex of 15,368 odd crores, and plus deferral in the fundraising plans, because this interim budget has now given that capex allocation shifted into FY25.
Okay, thanks a lot for that, Sapna. Appreciate it. Well, fertilizer stocks are also on our radar. The stocks have actually slipped after the government has cut fertilizer subsidy by 13%. Sonal is here to decode the budget impact. Sonal, over to you.
Thank you so much for that. Well, there was an expectation that fertilizer subsidy would be cut because gas prices, remember, were lower. So that would have largely impacted the urea subsidy. But this time around, the NBS subsidy has seen a sharper cut. So the fertilizer subsidy overall is cut by 13%, after which urea subsidy is cut by 7.5%, while the complex or the NBS subsidy is cut by 25%. So IIFL has put out a note where they say that the NBS subsidy would be relevant to the likes of Coromandel International and other complex players, while the urea subsidy would be relevant for the likes of Chambal Fertilizers. That one is down lesser than what we saw for complex fertilizers. Though the cut in allocation looks steep for NBS, and that is something which could impact the stocks like Coromandel International because of lower subsidy, they say that this could be taken negatively for such players. But they are saying that the government has been revising allocation through supplementary grants in a particular season, the Rabi season that is, if they think there is a shortfall. However, they see a downward revision this year amid the noise of increase in raw material prices dashes the hopes of industry, where they are expecting any upward revision to fertilizer subsidy as well. So all in all, the cut has been steeper than what the street was working with, and that's why the stocks which are in the complex fertilizer space, the likes of Chambal Fertilizers, they could be negatively impacted.
All right, Sonal, thanks very much for that. Rahul is still with us. Rahul, I'm sure you've been in touch with your team as well. Anything they've picked up sectorally, bunch of stocks where there is an impact one way or the other, based on what we've heard?
No, I think it's going to be a lot PSU oriented is my sense. I think, of course, I'm sure you've discussed this 3 railway corridors as well and the impact, and we were discussing this in the morning as well. I think probably the best way to play any sort of infrastructure, Prashant, in India is cement. I think it's because of the cash flows. And I think those kind of cash flows can fund the Capex themselves. I heard you talk about public sector banks. I think one of life's biggest mysteries for me is that SBI is a 18% ROE company, Bank of Baroda is a 16% ROE company, and they go at just 1.1. I'm not saying you need to give it an ICICI Bank kind of multiple, but do you need the discount to be so large? I mean, intuitively, if I reverse the question and ask you, is there one corporate that you can name today that's going to go bust in the next 1 year or 2 years? The situation is very different from where it was a decade back. Retail slippages thoda idhar udhar ho jayega, by and large. Net interest margins maybe for a quarter or two, but logically SBI and Bank of Baroda, according to me, should be at least 50% higher than where they are today. The entire PSU basket, whether it's railways, defense, across the board, have re-rated multiple times over. So I think that's probably, something that one can look at. And lastly, I think because, Sonia was talking about affordable housing, I think the way to probably play it could potentially be through stocks like Kajaria. I think that's, we like the tile segment. And I think there we do have an upside of almost 30-35% on that name. I think reasonable to assume a 14-15% kind of volume growth if these numbers are to come through. So I think probably that's one way to play home improvement in addition to the housing finance companies we spoke about. So I think those will probably be specific to this, but can these immediately react? I don't think so. It's just an announcement. It has to be implemented and then it will come into the numbers. But, Prashant, I've always done one thing after seeing cycles: focus on cash flows, focus on dividend yields, focus on growth. It'll stand you in good stead. I mean, your colleague was just talking about OMCs right now. I don't know how many people are aware. It's the only sector in India and probably one of the only sectors in the world where the free cash flow yield and the dividend yield is higher than the price to earnings multiple. Logically, the OMC should be multi-baggers from here theoretically, but obviously there's an overhang. But there's a lot to play. I mean, just because the Nifty is at 22,000 to say that, there's nothing to buy, I don't buy that.
Okay. By the way, the big story still remains what happened with Paytm, right? I mean, after that 20% circuit down. So I'm going to come to you in a bit. My colleague Ritu is standing by. In case you missed out on the news, you want to know what's the latest over there, Ritu is here to explain what this means, the impact, and what brokerages have said. There have been a slew of downgrades that have come and post this news flow, Ritu.
That's right. First, just to distinguish between the app you and I would be using on a daily basis, the Paytm app, which is owned by 197 Communications, that is unaffected, untouched. The restrictions have come in very much on Paytm Payment Bank, and with the restrictions that have come in from RBI, it is pretty much, the business is kind of shut, at least as of now. What RBI has said that Paytm Payment Bank must stop onboarding any new customers with immediate effect, and this action has been taken because of material supervisory concerns and repeated non-compliance with RBI directions over the last several months. In fact, since 2022, as we understand. So no further deposits, no credit transactions, no top-ups for wallets, no use of fast tags after the end of February, end of this month. By 15th March, of course, all the other actions have to be wound up, whether it is the nodal accounts of 197 Communication and Paytm Payment Services to be terminated and so on. But, in summary, no banking services can be offered. Now, why this action, stringent action on Paytm? And I'll take you back to March of 2022, which is when first RBI, stopped the bank from onboarding new customers because of deficiencies in their IT systems, in their KYC, risk monitoring, and so on and so forth. And now this circular does not even have a sunset clause where it says if you're able to satisfy certain compliance conditions, RBI will revoke this embargo. That is not mentioned at all. So, we'll have to see how this pans out. As far as the impact on customers is concerned, you can withdraw your balances or utilize your balance in your wallet, which, as per our, sources, is not more than 3,000 to 4,000 crores of total deposits that is sitting with Paytm Payment Bank. As far as brokerages are concerned, you have the like bank adds to the already heavy regulatory overhang, but there'll be no immediate impact to the UPI payment business, which is the bulk of the business. Macquarie believes that these lapses are quite material, and it is indirectly revoking the PPI license of Paytm by imposing these restrictions. Jeffries believes that the direct impact can be 20 to 30% of EBITDA, which, by the way, Paytm has also said that the annual EBITDA impact will be about 300 to 500 crores because of these restrictions.
Okay, Ritu, thanks a lot for that. So that is the big headline of the day. Let's do one thing. Let's take a quick commercial break, but don't go anywhere. We'll continue with our coverage on the union budget, big takeaways, as well as the market. Market has clearly moved on. It's absolutely flat. The mid-cap index is under a bit of pressure, but the bank nifty has recovered in a big way. Lots of PSU banks are doing pretty well. Don't go anywhere. We'll come back in a bit.
So we got in, I think, around the 1050 odd level, or perhaps a little lower than that. We got in at an attractive price. Why did we get in? ME Organics supplies intermediates to some of our larger pharma holdings. So, for example, ME Organics supplies intermediates to Divi's Lab. Divi's Lab is the 5th largest maker of APIs in the world. Different part of ME, the lithium-ion piece, that's a business based out of Noida. That's a business they acquired a couple of years ago. And looking at India's import-export data, we figured out that this is a very high margin that AMI is involved in. Basically, they're supplying stuff into the ecosystem, going not just into EVs, but also into the semiconductor ecosystem.
Welcome back. You're with us here on CNBC TV 18. We are starting closing bell half an hour early, and we got the entire closing bell team here. Rima, hi. Hi, Nigel. Welcome back.
Long haul, Prashant?
So,
Good going.
But it's, this is the definition of the interim budget, right? I mean, it's actually just, in a way, a hand-holding exercise until, of course, the big one comes through in the month of July. Markets have been very well behaved, no real big volatility. They've been quiet. I mean, 15 points lower as we speak on the Nifty, 21,710. We'll discuss more market stocks, etc., in a bit here. But let me go straight across to Mr. Amitabh Kant, who's the G20 Sherpa and the former CEO of Niti Aayog, who's joining us with his reaction to the budget and what we've heard. Mr. Kant, good afternoon. Great to have you with us here, sir. Prashant this side. Your first thoughts, first impressions of what you've heard. Many were thinking that this is going to be a full-fledged kind of a budget. I think that view was in the minority. Most thought this will be interim, and we've got exactly that. So I have two questions. One, do you think what we've heard will be continued through in the big budget in July, or will we see big changes? And two, what are your first thoughts on what we've heard? Capital expenditure, spending growth, and of course, the fiscal deficit and the consolidation we've seen there. Go on, sir.
So, Prashant, I think it's a budget by a government which is demonstrating confidence that it will come back. And also, it's a budget by a government which believes in fiscal discipline. So I was quite impressed by the fact that it's talking about fiscal deficit at 5.1% and then bringing it down, laying down a clear roadmap for 4.5% the subsequent year. And I think that's really critical because that would really mean that government will borrow less, interest rates should come down, the private sector should be able to access resources at a much lower rate of interest. We should be able to kickstart private sector investment in a much bigger way. I think those are all critical messages to be sent out. And I think this demonstrates a huge level of fiscal discipline. Also, the fact that, from 2013-14, from 1%, it has taken the Capex to about 3.3%, and now this year to 3.4%. Now, government has done its bit in terms of Capex spend, and my view on that is that we should now crowd in private sector investment into infrastructure as well. And that will be important because if you want productive efficiency in the economy, if you want good private-public partnership, if you want good operation, good design, good execution, you need to bring in private sector in a big way, and that's important in all sectors, including, we need private sector to come into areas like railways also. And I think that, to my mind, is a clear signal that government wants private sector to come in over a longer period of time. And the third is this clear messaging that which to my mind is very important, that if you want the country to grow at rapid rates, then you need the states to improve. And a lot of reforms now need to be driven by the states. So if you're putting in 75,000 crores saying that this is linked to reforms, and you are going to give money for infrastructure creation if you carry out reforms, it's a big message, and it's all milestone based. So it's incentivizing the states to push for reforms. And if the eastern part of India, which is talked about, if the eastern part of India can really avail of the 75,000 crores, they will really kickstart infrastructure in a big way. And I think the focus on the 1 lakh crore for R&D for the private sector, that will be critical. But one point I want to make, which is about yesterday, the Finance Ministry reducing the duties on a vast range of items which are used for mobiles. Mobile manufacturing, a range of items, the duty rates have been brought down yesterday. And I think that'll make India a very, very competitive in the global value chain, which is to make India a leading manufacturing nation for export of mobiles from India. And that is a good move to my mind. And so these are my few comments.
Mr. Kant, good afternoon, sir. Great to have you on the program. Just to press that point a little further, Atmanirbharta and manufacturing, make in India. I was speaking to, a couple of members of industry and the tax circles, and I think one surprise was that while the sunset dates on several, tax exemptions were increased, for instance, GIFT City, etc., that all important 15% concessional tax rate for new manufacturing units, that was actually not increased. So I just want your perspective on how we should read this. There's a lot of talk about Viksit Bharat, becoming a developed economy by 2047, but no specific new announcements or no big mention on manufacturing. I mean, schemes like PLI, etc. So is it just because it was a vote on account, and maybe we'll hear more big bang stuff in July? Is that how we should interpret this?
Yeah, I think you should wait for a long-term budget. This is an interim budget, and I think it's truly an interim budget. It's not the main budget, so I think you should wait for that. And that's why not too many giveaways in terms of taxes, etc. I think we should wait for the longer budget. Don't have too many, don't pin your too much hopes on too many policy announcements at this stage. This is a very good interim budget. This is an outstanding interim budget to my mind.
Absolutely. And very crisp, very short. And on a side note, we were planning for almost a 2-hour budget speech, so we had to change up as well. Mr. Kant,
so the speech was truly designed for an interim budget, and I think it's done. It's hit all the right notes for an interim budget, and I think you should wait. You don't expect too much. Wait for the long-term budget, but I think as an interim budget, it's an outstanding budget.
And I absolutely agree with you. Mr. Kant, just to one quick point on divestment. It's come up again and again. I mean, I think the RE has been revised to 30,000 and the budgeted estimate is 50. This is as good a time as any. I mean, maybe the best time for the government to collect funds. And many in the market believe, well, will we see that in a big way? And why not in the first year of the new term? Yeah.
No, I totally agree that I'm a great believer that, if the country's productive efficiency has to improve, if India has to grow at higher rates, and incidentally, my view on this, on the nominal growth rates, is that it's very moderate rates have been put into the interim budget, and probably we'll end up faring better. But my view on this is very clear, and I've been a long-term advocate of the fact, as the Prime Minister has been advocating that government, it's not the government's job to be in businesses, except a few areas. Government should disinvest, government should do asset monetization in a bigger way. All this helps to bring in private sector, and I'm a believer that private sector brings in greater productive efficiency in the long run. In the interim period of the last 3 to 4 years, government has created a lot of infrastructure, but it should, in a transparent, competitive manner, put it out for private sector to bid and do operation and maintenance. A lot of more disinvestment should kick in in the coming years, and that'll bring in, because the government will get the right values. This is the best time to get the right values. Otherwise, and it'll bring in great efficiency into the economy in long term. If you have to look at a 2047 vision, it's very clear that private sector will have to play a far more critical role.
Mr. Kant, while in the speech, there was a focus on women, youth and farmers, etc., and even the rural economy, but we haven't seen big measures which can boost consumption, particularly at the rural end, which some people in the market find surprising considering we are in an election year. How would you respond to that?
Well, I'm not a great believer in a consumer-led growth story. I'm a great believer in infrastructure-led growth story. It takes a little more time, but in the long run, that's what drives the economy. If you're looking at 2047, if you want to get into 9 to 10% growth rates over a long period of time. Many countries of the world have done it. There are challenges in the global economy. But the only way for India to grow on a sustained basis is infrastructure. And that will create rural demand. If you're going to create roads in rural areas, if you're going to put electric buses in rural areas, if you're going to provide rural houses, which the budget does, if you're going to do a rural solar rooftop, if you're going to provide piped water connection in rural areas, if you're going to do toilets in rural areas, whom will it benefit? It will benefit the rural population. It should all be infrastructure-led, which will create great consumer demand in due course. And that is how the country will grow in the long run. So don't get into this bogey of creating artificial consumer demand.
That's put forward forcefully, as always. Mr. Kant, just one last question from my side. You wear so many hats. You're so involved with the industry on so many different industries, really. Will we see, private participation in infrastructure spending picking up in a big way? Can you see telltale signs of that? Your thoughts, sir?
I think post-election, you will see, after this government comes back, you will see a lot of more private sector. Private sector investment is going to kick in a big way. You can see all clear signals of that. And capacity utilization is at a good high. Interest rates will come down. There's good consumer demand. I only wish that the global scenario also improves, and you will see long-term private sector investment. We should put out many more roads, many more projects, well-structured, fully de-risked. After taking all approvals, we should put those SPVs out into the markets for private sector to bid for, and you will see good demand. Move over to a lot of more well-structured, well-cleared, well-defined infrastructure projects, and you will see very good bidding for those projects.
Okay. Mr. Kant, so then to wrap it up with final thoughts, and going back to what the finance minister was saying in the speech when she outlined some of the key priority pillars for this government, for Prime Minister Modi, where she mentioned Garib, Mahila, Yuva, and the Annadata. As we look over to the concept of the Viksit Bharat, and she said that the next 5 years will be years of unprecedented growth, and that fills us with a lot of hope. How do you think the priorities will shift, if at all?
No, I've worked with this government for a very long time, and this government actually believes in inclusive growth. It believes in cutting across all segments. It doesn't, when you're implementing schemes on ground, and I did the aspirational district program with this government, it doesn't look at any particular section. It doesn't look at caste. It doesn't look at religion. It doesn't look at creed. It believes in saturating a scheme at the grassroots level. So if you're saturating all schemes at grassroots level, you're making a dent on poverty.